Good weekend, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Friday, the 18th of August, 2023. Now, before I go into any of the charts, I want to remind you, if you haven't seen our new report on the bond market, you want to look at this. I cover weekly charts, daily charts, price counts, something that you want to take a look at, as well as the seasonals, both the 5, the 15, and the 30-year seasonals. I put it together. If you saw the last stock report, and boy, that thing looks like it's been pretty accurate so far. And by the way, stocks still have a ways to go in terms of seasonality. September's often an ugly month. I think people forget that. They keep talking August. Historically, September's not pretty. But in any case, what about this? We'll take a look. How do you see it? You go to our website, iraepstein.com, under research. You can always, there'll be an icon up here that you just simply give a click. That's the other way to do this. And it's going to go off the board. It may go off the board by midnight in 1 second on Monday. So you've got a limited window to look at it. My reports are only up for a couple of days, and then I take them off. I want you to look at them when I put it up, not at your convenience weeks later. Okay, so that's how I work it. Take a look. All right, let's go to the markets and talk about things. This is the week of implosion in China. We have seen now Evergrande today declare what I didn't even know what it's about. It's a Chapter 15 bankruptcy. We are seeing steel barriers going around one of the large shadow banks in China. I am hearing another property developer, much smaller than Evergrande, but still a sizable one. Another forfeiture is going on there, and nobody has confidence. You're going to go and buy a piece of property. Remember how property works there. You pay for it all up front. It's not the way we do it in America. America, you buy it, it's finished when you're buying it, right? You're ready to move into it. You might put money down as a good faith deposit on something, but you're not getting a mortgage till that property is ready. That's not what it's like in China. In most cases, I'm sure there's some exceptions, but in most cases, you buy something and it's yet to be sometimes even built. So it's the concept to me is all wrong. They're going to take Peter's money to put up the money for Paul's place and hope there's another John to pay for Peter. Can I go on and on with that? And problems eventually happen. Now you've got lack of faith in China. How do they get around it? They got to do something awesome, whatever that is. I'm not smart enough to know what it is, but that's what they have to do. Otherwise, it feeds on itself. It'll be one after the other after the other. This starts a domino impact. They're smart enough to know that. Are they smart enough to react to it? I don't know. Frankly, I care because it affects all markets. The next big event that's going on, interest rates are up. Now, in a way, I'm sitting here, and I knew this. You know, I'm on Aussie Biz TV. I do other TV shows. And for a month and a half, I've been asked, what would you do? And I said, why are you gambling when you can get over 5%, almost 6% in some CDs, and you're trying to predict that the stock market's going to go up when we're getting into a weak period very soon? And this was over a month ago. Okay, did the market rally? Yeah. You know, and when the market goes up and a stock gains 6, 7, 8%, you go, oh, that Ira doesn't know what he's talking about. And then they fall back, and that's the beauty of some of your money in longer-term things. You heard the word some. Let me spell it, S-O-M-E. Not all your money. And I am not telling you what to do with your money. I was asked the question. I'm answering and telling you. And the reason is you have it risk-free. That's a big deal. Now, eventually, as this comes down, assuming China's issues get resolved, and assuming the market is wrong. Now, let me tell you what I mean by wrong, and then we'll get into the charts. Inevitably, at the bottom of a market, everybody's the most bearish. And inevitably, at the top of a market, everybody's the most bullish. I'm not talking stocks here. I'm talking bonds and notes. And now I'm starting to hear, get ready. The world's changed. We are in the world now that for a very long time, years, we're going to be at 5% rates. Okay. I don't have that crystal ball. I don't know how these guys that have these PhDs do, but they do. And we're supposed to believe that. I'll let the data tell me what it's going to be. High rates are the solution for high rates. Low rates are the solution for low rates. You know that. High prices bring on product. Low prices, you get rid of product. That's how the world works. I'll stay with that. When I look at the S&P, we're in a corrective mode. We were down 5% so far for the month. We're halfway through the month, so 5% down. When we look at a weekly area chart, you were down another 2%, and I have been telling you day in and day out, because I show the weekly chart, I think a challenge of the 18-week average of closes is in the cards. That seems to be what the market wants to do, and I can see that coming up. When I look at the pattern of the chart, I see one with a higher high and a lower low. That's not a downtrend. That's no trend. This is over. This swing from here, and I could even carry you back over here. I argue that part of the swing has just ended. Now, does this turn into a major bear route? It could for August and September. We'll see. I don't throw that out. Where did the market stop on the break? Well, so far the low this week on the weekly chart is 43.50. What do you think the 18-week average of closes is? 43.59.90. You hit it. Now the game begins. Does the market have the power to drop to 42.06, or does it start fighting right through here? Where did the market go? Each time it's hit the Bollinger Band, it's drifted sideways. Did it again up here, and this one carried through, and when you took out that low, right through that, it was pretty much the game because you broke the pattern, and now you're sitting at what I call that neutral area. You've lost your bullish embedded reading in the process. So if you get excessive here, the first number on the downside is another. What is it? We're at 4,300. I'm talking 42.06. So another 180 points or so. Okay, I can see that. In the Dow, you lost the embedded reading. The objective, the 18-week average of closes. Again, a pattern of a higher high, lower low, went to a Bollinger Band. For those of you that have taken the Bollinger Band course, applaud. You learned a lot. What do you do the first time you hit it? Even if it's embedded, you're taking some money off the table. Now that you've lost the embedded reading, got to be sidelined. Could it re-embed? Of course. Has it? No. So what are you supposed to be? Sidelined. That's what I teach. In the NASDAQ, sidelined. You lost the embedded reading. Let me take you to it. This one lost it, not here, but right here. Last week, August 11th, the goal is to get to the 18-week average of closes. I think you're knocking on that door. The Russell lost the embedded reading. Goal right through here. Now, you're at an important area. You're at the combination of the 200-week average and the 18-week. The resistance was here. Now, one of the things I teach, and if you take my courses, you can sign up, by the way. The beauty is, if you're watching me on YouTube, look at the blue button that you see there. If you give it a click, you can get both my ETF and my morning subscriber videos right here. You get a lot more if you go to our website and you sign up there, because then I can get you into all the things from our website, not that you're watching it here on YouTube. But either way, you're ahead of the game. Why? Because you learn what I say on the first moves over, key moving averages are under them. It's very important. In the 30-year bond, okay, we're riding this down. You're oversold as can be. Will you reach down to the next price count? What do I mean by that? Remember, I just said I have a special report, a video report for you to look at. It's on the website. Look at it. Remember what I just said. In the 10-year note, you're running this too. You are oversold. You're running the lower Bollinger Band now. How far can you push it? Dollar index. Market finally made it over the combination of the 18-week average in green, the 100-week average in green. I knew I said something wrong there. The 18-week in red, and a target could be the 104.50 area. Wow, I didn't see that coming that high, but if you look at it, momentum's not overbought. The trend is up, bias up. To tell me that the market doesn't have that power, you have to take out last week's low, which you see right over here. I think it's 101.60 on that chart. In the eurocurrency, now you're going to come down. Will you make it to the 100 week to see if you got support against the 108 level, basically? Resistance is now 109.58. Trend down, bias down, momentum down. Not a pretty chart at all. Canadian dollar gave up everything and just sort of sinking away at this point. And in the end, first major support is here, right now. The 68.40 level you hit today, 68.54, you're right in that ballpark. So I'm looking for some short covering there. The big question is, are we going to embed? If we do, then there's even potentially more downside in this market. Bitcoin, look at lower highs, lower lows. I pointed this out all week to you that this market's starting to break down. Big time failure against the 100-week average in the Bollinger Band all the way back here. Remember, it's a weekly chart. First major support coming in at 25,169. Support doesn't mean you go long, but that is because you have a market that's not embedded where I look for professional short covering to step in. Now, in a weekly chart, this is Brent versus WTI, and the chart's not wrong. You do realize back here, everybody forgets, but in 2022, oil prices went negative. Do you remember that? They'd pay you if you had a storage facility, you take the oil. And of course, that was short-lived, and the market came roaring back. And now you're back into one of these patterns where as long as you stay under on a weekly basis, the 410 level right now, which is the 18-week average, you're still to the area where WTI on the longer term and Brent get closer together in price. When I look at the chart, let's give credit to OPEC. They have done a heck of a job in the face of slowing Chinese demand. China's got that implosion going on, yet the market was able to get here. Will they be able to hold things together is going to be the big question. A combination of, number one, I do believe OPEC has the will and the resolve to keep oil off the market. Can China keep their economy together is the big question. The rest of the world seems to be doing okay, not in China's malaise that they have right now. It's really a terrible situation there. WTI oil, same thing. You know, we're producing record amounts of oil. I don't think people even realize it in America, what we're doing. We still have to fill our SPR, but it takes a different grade of oil. It's a whole way that you got to do this. And the Biden administration has no energy policy. They have no idea what they're doing. By the way, Joe, did you make it to Hawaii yet? I know you're meeting with the leaders of Japan and North Korea, but we're Americans. You were needed there. Could have canceled that meeting. Rebob gasoline. You can see the resistance point, the upper Bollinger Band, overbought. Now, gasoline and heating oil. The window is here from the 14th of August, historically. I can't tell you that history is going to work this time around until the 28th. You normally get an upsurge in these two markets. So it's something that I always look at. The chart action isn't bearish here, nor is it in the heating oil. So those are things that I pay close attention to. Again, be sure you take a look at that bond report. You can see it by just moving your cursor to the top up here if you're on a PC, or go to iraepstein.com under research. Remember, take the enhanced Bollinger Band course. It's under education. I think it'll really, really give you another perspective on how to work with that all-important indicator. Take care.